Hello, everyone. Welcome back to the channel. Today, we are diving deep into the latest gold market news out of the United States. What is moving prices, what to watch, and what tomorrow might bring. If you enjoy this kind of update, make sure to like and subscribe so you never miss a beat. Gold has been on a tear lately. Several important developments from the U.S. Federal Reserve, from economic indicators, and from international demand are combining to push gold to record highs. But as always, there is tension between bullish drivers and possible headwinds. So let's unpack everything. What just happened? Fed interest rate cut. The U.S. Federal Reserve cut interest rates by 25 basis points recently, signaling a continued easing cycle for the remainder of 2025. That move was widely expected by markets and is intended to support economic activity in the face of a weakening labor market. The Fed also indicated there may be two further cuts this year, though it emphasized a meeting-by-meeting approach. Gold price reaction. Spot gold prices rose by about 0.5% to roughly $3,660 per ounce after the Fed cut. U.S. gold futures, December delivery, also gained about 0.4% to around $3,693 per ounce. Overall, gold has now marked its fifth consecutive weekly gain. Forecasts from analysts. Deutsche Bank raised its forecast for gold in 2026 to $4,000 per ounce, citing strong central bank demand, weak U.S. dollar potential, and ongoing global uncertainty. Some others even suggest that if pressure builds on the Fed, or if political interference weakens confidence in monetary policy independence, gold could go further. Technical signals. There is a strong bullish trend intact. Analysts point to a breakout from a large ascending triangle pattern, which suggests further upside. A possible next resistance, psychological and technical, resides near $3,800 per ounce. Support is seen around $3,650 per ounce, where gold has tested several times. What are the risks and headwinds? Even though the Fed cut rates, the language has been cautious and not as dovish as some had hoped. That means that expectations for aggressive rate cuts may be tempered. The U.S. dollar has shown occasional strength, especially after comments from Fed Chair Powell indicating careful consideration of economic data. A stronger dollar tends to weigh on gold, making it more expensive for holders of other currencies. Inflation remains a watch point. August inflation in the U.S. was still elevated near 2.9% annually, which is above the Fed's target. If inflation drops significantly, gold's appeal as an inflation hedge could fade. What to watch today? Statements from Fed officials, especially after the rate cut, will be important to see how aggressively they intend future cuts, or whether they might hold steady if economic data, especially labor market, CPI, PPI, shows strength. The U.S. dollar index and yields on U.S. Treasury bonds will be major indicators. If yields rise sharply, gold might face pressure and cause temporary drop. Global geopolitical risks or central bank gold purchasing could inject support if uncertainty increases. What might happen tomorrow, 20 September 2025? Based on the current situation, here are possible scenarios and what you might expect. Continued upward momentum. If no unexpected hawkish surprises come from Fed commentary or major economic data, gold could attempt to test resistance near $3,700 to $3,750 per ounce. Traders may push it closer to $3,800 if momentum holds. Pullback or consolidation. Profit-taking is likely after recent gains. We might see a short-term drop back towards support at $3,650 or slightly below. Consolidation could dominate as traders dial in on upcoming economic reports. Volatility spike. Any surprise inflation number or labor data that contradicts expectations could trigger volatile intraday swings. Also, political developments or global risks may push gold up as a safe haven. Dollar and yield moves key. If U.S. bond yields jump or the dollar strengthens, possibly due to stronger than expected U.S. data, that might pressurize gold and cause temporary drop. Long-term outlook. Many analysts believe gold is likely to stay strong well into 2026, with potential to reach $4,000 per ounce or more, depending on how policy, inflation, and global demand align. Central bank buying remains a tailwind. If more nations increase reserves, gold demand will get a lift. On the other hand, if inflation falls fast or if real yields, interest rate minus inflation, rise substantially, gold may struggle. Gold in the USA on 19 September 2025 is riding strong winds from the recent Fed rate cut and expectations of further easing. The bullish trend is supported by technicals, with possible resistance ahead near $3,800 per ounce. But gold is not without challenges, especially from dollar strength, cautious Fed language, and inflation dynamics. Tomorrow could be a defining day of whether gold breaks higher or takes a breather. Either way, there will be moves worth watching. Thank you for watching. If you found this helpful, drop a comment what you believe gold will do tomorrow. Do you think $4,000 is realistic or too aggressive? Also, please like, share, and subscribe. See you in the next video.